Hey everyone, welcome back to the channel, your number one source for income-oriented investing. I gotta do a video on this because I cannot believe the comments I'm seeing on this post that I did, that I keep saying, that I keep begging you not to do. Don't do it, please. Let's read the post that I just did. Do not hold high yield US listed ETFs like YieldMax, not Canadian. I'm not talking about Canadian ETFs that hold US stuff. I'm talking about high yield US listed like YieldMax in your TFSA. It's dumb. It is dumb. No matter how high the yield is, it will never ever be worth it. Always go for the Canadian listed equivalent. You automatically get about 15% more return annually. It's actually more than that. And I'm going to back up everything now with some hard evidence, some hard numbers. And I'm going to focus on the one that everyone seems to be talking about, MSTY YieldMax, the YieldMax one. There's other YieldMax as well. But the point I'm going to be making, the arguments I'm going to be making is really going to be applied for everything. Whether you hold QDTE in your TFSA, MSTY, or another YieldMax, any high yield US listed ETF, you should not hold it in the TFSA. It's really dumb. It's really dumb, and I'm going to show you now why. I'm going to go through my points. I'm a little bit irritated today. I apologize. I'm going to try to keep cool, but I feel like this is very, very important, and I'll show you how much you guys are losing out with some hard evidence using MSTY as an example. So let's just go through some of these comments I'm seeing in this Facebook group, which is when did I make this? May 14th. I made this 2 days ago, and by the way, I'm filming this on May the 16th on a Friday. I'm actually supposed to be trying to enjoy my last weekend here. I still have to pack for my move next week to the city, but this is how important I feel about this, that I gotta film a video right away to get my thoughts out on this. So let's see some of the responses, which have gotten lots of likes and hearts. So obviously many of you are not understanding this, not getting it. Sorry, I got to disagree. My MSTY and PLTY, I'm assuming you're talking about the Palantir YieldMax here, going to give me some great service in the TFSA, some great disservice, my friend Rod. Stay tuned, I'll tell you why. I appreciate a little bit more info why you think it's dumb. No problem. I will give you a lot of info. In fact, I came out with a video of this. Let me just get the video for you guys. This is the video, by the way. This video came out, I don't know how long ago, quite a while ago. Do not hold high yield US listed funds in your cash account or TFSA account like QQQY, JEPI, etc. So in here in this video, I actually do some breakdown. I prove my point. Obviously, you guys have not seen the video or not understood this video, but I highly recommend you watch this freaking video. Again, I'll put the link in the video description below. Going back to here, I appreciate a little bit more why it's done. My MYSTY dividend this month, and I'm assuming here when we see MYSTY, because there's also MYSTY now from Harvest, and then there's MSTE, which is mentioned here, which is the leveraged micro strategy from Harvest. Okay, so let's make sure. So my Harvest dividend this month was $2.37 a share, and that's exactly what MYSTY gave. $2.37 a share, which is right. Hang on here. After tax, it's 201. That's correct. 2.37 minus 15% is 201. I definitely didn't get that from MSTE, so not sure why you are so against holding it in the TFSA. I don't like paying taxes, but it's a necessary evil. It's a unnecessary evil. Jane McCarthy, and I'll stay tuned. I'm going to show you my numbers here. Here's another one. The tax is a non-issue. It's a humongous issue, Wes. Huge. I don't understand at least why it's even an issue. Well, I'm going to show you. $8 buys a cheap calculator. Math isn't hard. I know math really isn't hard, but it looks like none of you have been doing it. So many think tax savings before maxing out income. It's not about thinking about tax savings, income. It's about putting all of it together, the whole picture. I have 60% in my TFSA, in YieldMax, and make a super chunk of USD each month. Why kill a super income to save 15% tax? Oh my God, Wes, you're just blowing and wasting, losing money every single month. So sad. Unbelievable. Tracy, I'll have to agree to disagree. I got roughly 19K USD, generating roughly $850 per month. roughly 53.7% yield after withholding. There's no Canadian ETF that pays anywhere close. Look at all these likes, guys. So why dumb? I tried a MSTY versus MSTY, and even with the 15% tax, I get higher distribution from YieldMax. Yes, you do get higher distribution, but you're gonna get a much crappier overall total return and performance. Here's Jacques. I just don't understand that a 15% withholding tax you won't be getting back. In the TFSA, you don't get it back. It doesn't influence the amount you contribute every year. Gives so much more income. This is a strange one. This is a really strange one. Why I got 5 likes is absolutely amazing. Pay 15% now instead of 35% down the road. What are you talking about? There is no tax in the TFSA, dude. Ed, what are you talking about? I've been including. Okay, anyway, there's more and more and more and more. So let's talk about this. First of all, the first thing I will tell you, you have to wrap your head around this, everyone. Yield is not return. Yield is not total return. Yield is not performance. Return, aka total return, aka performance, is yes, the dividends, but also the stock price and the NAV, right? Everything together, that's the total return. When you go to ETF fund managers' websites, you look at the performance, that's total return. It includes the dividends. We always have to look at things from a perspective of return. If you're getting all kinds of dividends and the stock price is not doing well, just because your yield and income is very high, maybe your return is very crappy. Very crappy. You have to look at it as, I'm putting in 10 grand after a year, after a month. What is the value of my 10 grand? What is my 10 grand worth after a month or 3 months or 1 year? And I'll show you what it's going to be worth when we do MYSTY versus MSTE. So just to recap here, for the MYSTY, okay, this is the YieldMax MicroStrategy cover call ETF. Very, very high yield. Obviously, first thing I will point out is that the management fee, the MER, is 99 basis points, whereas MSTE, which is cover calls on the same stock, is less than half. It's 40 basis points. Okay, so first thing, you're paying less than half the fee with MSTE. Yes, the MER is gonna, which is not out yet, it's gonna be very high because that includes leverage costs, but that's the advantage. Number 2 of MSTE, it has 25% leverage. MSTE does not. So over time, if you believe in MicroStrategy that it's gonna go up, you're definitely gonna be better off with this one. On top of that, another point, a third point, MSTE is writing covered calls on the whole portfolio, the whole thing. Harvest starts at 33 and they could only go to a maximum of 50%, which means by default, you're capturing full upside of 50% of MicroStrategy, where for MSTY, you're not capturing that upside. They write cover calls. Again, this is the YieldMax way, and I'm not saying it's a good or bad thing, but if you believe that MicroStrategy is going to go up over the long term, obviously, if you're writing more covered calls, you're giving up more upside. You're going to get much less total return, much less performance. Higher yield, lower performance. In the end, it's always about performance, guys. Okay? So 100% call writing, 33 to 50% call writing. Another thing I want to debunk right away is the USD. Oh, but MSTY, I'm getting it in USD. I'm getting it in USD, which is worth a lot more in Canadian. Just like I proved, so basically what you got to remember that MSTE is not Canadian currency hedge. It's not Canadian currency hedged, which means if the Canadian dollar gets weaker, the American dollar gets stronger, that's going to help MSTE. So it's essentially like you're buying it in USD currency. Okay. Don't believe me? I've already proven that in a video called HYLD versus USCL. We know that it's HYL, yeah. And in this video, HYLD versus USCL, I show HYLD.U versus USCL. HYLD.U is basically, you could say, an S&P 500 cover call ETF with 25% leverage in USD currency. In USD currency. Okay? USCL is the same thing. S&P 500, covered calls, 25% leverage in Canadian currency, but it is not currency hedge. They don't do hedging. So if you think, well, MSTY is better because the performance is going to be better because I'm getting it in USD or it's in USD. If you do HYLD.U, translate it to Canadian dollars, let's say, versus USCL, you see that the performance is exactly the same. So what does that mean? That means that if a fund is in Canadian dollars, giving you buy it in Canadian dollars, you get your dividend in Canadian dollars, but it's not hedged to the Canadian dollar, it's as if you're buying it as USD, you could say. Okay, the performance is going to be the same. I know I'm a bit aggravated today, but bear with me, guys. I feel this is very important because you're losing money. You're losing money. This is crazy. You're losing so much money. How much money you're losing? All right, let's get to the math now. Let's get to the math. So I just want to debunk everything. Okay, here's another thing I saw in the group somewhere. Canadian ETFs still pay 15% withholding tax. That's another thing I've seen. Guys, the Canadian ETFs that hold US stuff, yes, they do have to pay still 15% withholding tax, but they pay the 15%. You ready? Put your thinking cap on and listen very carefully. They only pay a 15% withholding tax on US dividends. US dividends. MicroStrategy has no dividend. So MST pays 15% withholding tax. Okay? They don't pay tax on the covered call income, on the call premiums. They only pay tax if the stock itself has a dividend, right? So if this was JP Morgan has a 1% or 2% dividend, then they pay 15% tax only on that dividend amount, not on the covered call. So that's something else I saw in the Facebook group. I'm not going to find it here, but somebody said, well, Canadian ETFs still have to pay 15% withholding tax only if it's a dividend stock. Okay, this one here on the Tesla one, the Palantir one, the Coinbase one, none of these stocks have dividends, guys. None of them do. Amazon, there's no dividend. There's no 15% withholding tax. Period. Okay? That's another thing I want to debunk. Again, guys, the most important thing, if you want to take something from the one line from this video, yield, dividends that you get is not your return. Let's finally do, before I blow my lid, let's compare MYSTY versus MSTE versus MSTR in the last month. Okay? So for this total return battle, I'm filming this on the 16th. I just put 1 month here. And I just took here, this is MSTR 311.66, and now it's at 405. Well, the market, I'm doing this while the market's still open. So 311.66, that's where you see the 311.66 to 405.12, which now it's 404.25, but I'll just leave it at 405.12 because I did the same thing for MYSTY. 1 month, guys, okay? 2083. Here it is. So 311.66, 1 month start stock price. 2083 for MYSTY, and MSTE, as you could see here, it's a little bit small. I apologize. You see there 1452, and I just put the price that it's at now, guys. That's it. So 1133, and again, it's changing, but I'm just gonna leave them as they were. 5 minutes ago it was 1836. Now it's 1833, but I'm going to leave it at 1836. 5 minutes ago MSTR was at 405, and MYSTY 2316, it's at 2316. I'm just showing you that I'm choosing the right numbers, okay? To do a total return comparison, we have to do it in terms of percentage. So this is the start price. This is the end price for all three. This is the May dividend. You got 237 for MYSTY, minus 15%, like someone accurately pointed out in the Facebook group, $2.01. MST 66 cents. MSTR has no dividend. Okay, so if we do start price and the end price, plus we got to add the dividend. We have to include the dividend, right? So we're going to do, so this here is this 2717 is basically this plus this, the gain plus the dividend. 1902 is this plus the dividend. 405 is basically 405 because there's no dividend. So this is the 1 month NAV gain. This is the net asset value gain. Price and dividend together. Right? MSTR went up $93. With the dividend, MST went up $4.50. And MSTY went up $4.34. Now, in terms of percentage, what is the total return, the performance, the percentage of gain? If you put $10,000 last month ago, how much percent up are you? Share price and the dividend together. MSTR, you're up 20. Very easy to calculate the difference between these two numbers, right? Because there's no dividend. It's not rocket science. 29.99%. Look how close MSTE is, up 30.99%. Almost the same exact thing. By the way, it's almost the same exact thing, and that makes complete sense because as I've stated many times before, if you do covered calls on approximately 50% or less and you add 25% leverage, the performance of that thing is going to be very similar to the underlying, right? If you're doing S&P 500, I've shown you total returns of QQCL versus QQC in the past, USCL versus VFV, HYLD versus VSP. What we notice, and we have data for a long time, unfortunately we don't have the data for a long time of MSTE, but the general premise is, guys, if you're doing S&P 500 with covered calls and 25% leverage, the performance, aka the total return, is going to be more or less similar to the S&P 500. So the same is coming true for this one here, for MSTE. And MSTR has been on a rocket ship, so that 25% leverage is obviously going to boost it even more. So this is why they're almost identical in performance, and even MSTE has a little edge. Look at MYSTY, the YieldMax one, 20.84%. In 1 month, if you held MYSTY instead of MSTE in your TFSA, you just lost 10% gain in 1 month. So if this is math, if you don't understand what's going on here and that you're losing money by having MYSTY, you're losing money overall. You're getting a bigger dividend. Yes, I agree with that. But you're losing performance big time. By how much? By a crap load. Why? Because of all the factors I told you at the beginning. The fee is double. More than double. It's 99 versus 40. MYSTY does not have the 25% leverage. MYSTY is writing on 100%. A lot of cover calls, guys. You're giving a lot more upside. So in a month or during a period where that particular asset is doing well, you're giving up a lot of upside. So if you feel like MicroStrategy is going to go up over time, you actually, yes, it's good to have yield, guys, but you don't want 100% cover calls. You'd rather have 33 to 50 because you're going to get a lot more upside, capture a lot more upside, capture a lot more performance, a lot more gain. Plus the 15% hit on the dividend is something that doesn't exist with MSTE. Okay, even if there, let's just say there is no 15%, it's still not even close. Still not even close. You're a minus. This is if you basically, now we're simulating if you have MSTY versus MSTE in an RRSP or a LIRA. This is what I'm showing you. If you have MYSTY in a LIRA, you're not going to have that 15% tax. So you're going to get your full 237. But you're still going to underperform MSTE. Of course you are, because of the factors that I told you, and I'll repeat them. The fee is much less with MSTE. You have that 25% leverage. They're doing much less covered calls, 66 to 50% less covered calls, and there's no 15% hit on your dividend. That doesn't exist in the RRSP. That's only for the TFSA and cash account. And again, the USD, because you're getting it in USD, it's not a thing. I've already debunked that. I showed you because MST is not hedged to the Canadian dollar. So guys, give me a thumbs up. I'm out of breath. I have knots in my neck because I really don't understand how this is not getting through to you guys. Yes, it's cool and it's fun to see a big dividend come in, a much bigger dividend than if you would have MSTE. But at the end of the month, at the end of the year, at the end of your life, it's always about return. If you just want maximum yield and you don't care about return and you understand that overall you're losing money, that's fine. And you've accepted that, that's completely fine. But I'm telling you, it's not smart. You're leaving a lot of gain on the table. If you would have put 10 in your TFSA, if you would have put 10K in MSTR, 10K in MYSTY, 10K in MSTE, your 10 grand would have went up this much with MSTR, this much with MSTE, and this much with MYSTY. It's a big difference, guys. And the difference is only going to get bigger and bigger with time if MicroStrategy keeps going up. Or if this goes for everything, all of them. The argument is the same for all of them. And look, I'm just trying to prove to you that my numbers are correct. Look at MYSTY versus MSTR in the last month, which I just did. Here it shows 27.39, not 29.99, because it's not counting today, May 16th. And on today, May 16th, MicroStrategy is up another 2%. So see that the numbers would have matched pretty much perfectly. This is ending on the 15th. But you see the big discrepancy with the return? Pretty big discrepancy here. Why don't we do a MSTY YieldMax versus MicroStrategy since the beginning, since MSTY actually came out in early 2024. 293% return, which is great, versus 456% return. Look at the difference in return. Look at the difference of a $10,000 investment. Your 10K in MSTY is now 40K, and even less in the TFSA because this doesn't show a minus 15% hit on the dividend. You guys understand what I'm saying here? This is not taking into account that you're putting it in a TFSA. So it would be even less than this. That's how much your 10K would be. With the dividends and everything. Total return here, aka performance. It would probably be, I don't know, probably be around 39,000 minus 15%. It would probably be somewhere $35,000, $36,000 if you're lucky. Versus MSTR, your $10,000 will be worth $55,600. It's a humongous difference. It's a humongous gap. And I'm fairly confident that the performance of MSTE is going to be very similar, at least a lot closer than MSTY, a million times closer. Very similar to MSTR, just like we've seen in the last month. Very similar. Just like we've seen on other ETFs that have a longer track record of covered calls and 25% leverage, right? The magic formula to have approximately the same performance as the underlying assets, if you're doing covered calls, is to do covered calls on only max 50%, which is what Hamilton does and Global X does and Harvest does, and 25% leverage. You need that 25% leverage. And I didn't even talk about the unleveraged Harvest one, MSTY, same stock symbol. I'm telling you, it would be, I could, without even doing it, I could do the exact same. You know what? I'm going to pause and I'm going to do it. All right, everyone, the results are in. So I did the same thing for the unleveraged version, the MSTY that Harvest does. And I had to go here because I couldn't find it in Google. But if you would do 1 month, I just do 1 month here. So 1 month, let closed at 1042. You see that? Hopefully, I know it's small. 1042, and now it's at 1235. So I just plugged in those numbers: 1042, 1235, plus the 40-cent dividend, right? MSTY here it is, has a 40-cent dividend in May. Or did they change that? Crap, I gotta pause again. Yeah, I was right. It is 40 cents here. They stuck with 40 cents. So, first 40 cents, you have at the end of the 1 month, with the dividend, the NAV went from basically 1042 to 1275. The percent of gain is 22.36. It's still beat YieldMax. Of course it is because it went up in that month and they're doing less covered calls. It only makes 100% logical sense. So guys, please, I hope you understood this. Do not hold. Don't do it. Like I said here, please don't do it. Don't hold the high yield US listed stuff in your TFSA. Go for the Canadian listed equivalent. There's less than half the fee. There's no 15% tax. They're not the Harvest ones. They have a Palantir one. They have a Coinbase one. They have the MicroStrategy. They have the Tesla one. They're writing a lot less covered calls, so you're going to capture more upside, and there's no 15% tax, and it's not hedged to the Canadian dollar. Remember, yield is not return. That's what I'm going to end you with. If you still don't understand, I don't think there's anything much I could say. If you tell yourself, look, Adrian, I'm willing to take a crap load of less money and less return over the years, but I prefer more income, and I'll take that 15% hit, fine. But understand that you're losing money. You're giving up return. You're giving up performance. That 10K that you invested in a year from now, or 2 years from now, and 5 years from now, whatever it is going to be worth much less than if you go with the Canadian listed equivalent that has less fee, that has a 25% leverage, less covered calls. It's not rocket science. Guys, I hope you enjoyed this video. I can't make it any more clear. Hopefully this is going to be the last time I'm covering this, because I can't do it. I can't do it anymore. And this argument goes for everything, not just MicroStrategy, right? Not MSTY. It goes for having like the round hill QDT and XDT. You should not have QDTE in your TFSA. Go with QQCL instead. You should not have XDTE. You should go with USCL or HYLD.U or HYLD instead, etc., etc., etc. Right now, guys, we basically have the Canadian listed equivalent for everything. So don't put the high yield stuff in your TFSA. If a stock doesn't have a dividend, then you could put any US stuff you want in your TFSA. If you want to buy just Tesla stock, then you could put Tesla stock, or you could put MSTR in your TFSA. That's completely fine, because there's no dividend on those and there's no 15% tax. Right? You understand what I'm trying to say? If the higher the yield is, if there's a very high yield, it's not worth putting a US listed fund in your TFSA. If you want to buy VOO or QQQ, which are listed in the American stock market, I still think you should get VFV and QQC instead, the Canadian versions. But it's not so bad. Why? Because the dividend on a VOO is only 1%. So you're taking a 15% hit on only 1% yield. QQQ is less than 1%, so it's not so bad. But when something is really, really high yield, taking a 15% hit on it every single month is a disaster. It kills your return. Go with the Canadian listed equivalent. Do yourself a favor. Do your money a favor. I don't know what else to say. So give me a thumbs up. I hope you enjoyed the video, and I'm going for a beer now. See you next time.